What are your next price targets for Bitcoin? Today, I interview Quant Analyst Benjamin Cowen, and we discuss, based on the data, how high, realistically, could the Bitcoin price go next year in 2024, post-halving? And then, of course, today, why is the Bitcoin price sinking? Why are we going down?
I think we've talked a little bit about expectations for the pre-halving year, and our general expectations, as you saw in 2019, is we kind of spend half the year going up, half the year going down, and we really get into that time-based capitulation part, which I think is probably more brutal, honestly, than price-based capitulation. It's where we get to the phase where people just really don't care anymore, and they say, people don't really care if the price goes up, they don't really care if the price goes down. We start to set into some form of apathy. And I still think that is likely where we're headed. And hopefully the markets will pick back up sometime, maybe like mid next year.
So we're not there yet. It seems apathetic now, but I guess there is still an audience. People are watching this video, liking this video now. We have to wait till they leave.
Yeah, I mean, the unfortunate aspect of it is normally, I would say, do you remember the social risk we looked at previously?
Yes.
That's kind of interesting because if you look at it here, you can see that. Can you see the social risk right here?
Yes.
I would like for us to set some higher lows and higher highs at some point. We have been unable to do that so far. You can see it's just one lower high and one lower low after another. And if you were to take, say, like a 30-day moving average of the social risk, you can see that we're kind of getting into some territory that we haven't seen in a long time. And that's that 0 to 0.1 risk band, which normally good things are not happening once we enter it. I think the sort of the glass half full approach is to say that, well, once we hit rock bottom, there's only one direction left to go, and that's theoretically up. I don't think the social risk has fully bottomed out yet. You can see that it actually went lower in 2018 and in 2019 in terms of the 30-day SMA of it compared to where it is right now.
So what's the biggest indicator that's affecting Bitcoin and crypto today? Is it still the Fed?
Yeah, I mean, I think we need to see liquidity come back to the cryptoverse, and that's just simply not going to happen when we have core CPI still printing where it is. If you look at inflation year over year, it's still sitting between 3 to 4%, which is again not where the Fed really wants it to be. And as long as this is the case, right, as long as we see inflation high and we see a relatively tight labor market, it is unlikely that the Fed is going to pivot. If you were to look at, I think we've talked about net liquidity before, like total net liquidity or global net liquidity. If you look at that chart, in general, when liquidity is going down, it's going to act as a headwind for things like Bitcoin and of course for the altcoin market. So ideally, we'd get to the point where we start to see liquidity flow back in, and I don't really think we're going to see that as long as inflation is at 3 to 4%. And remember, the Fed, up until this point, they have a dual mandate, right? They need they need price stability, but they also want to see maximum employment. So far, they've been trying to reach price stability by bringing inflation back down. The labor market has barely budged, but with job openings coming down and likely to see some seasonal effects, we're here with initial claims and continued claims. We've seen them go back up in September like we did last year. I think as we get to the end of this year, early next year, we're going to see the lag effects finally take hold. And then the Fed's going to have to sort of weigh the balance between inflation and the labor market. So theoretically, sometime next year, once we're on the other side of a Fed pivot, I think we'll see liquidity flow back into the cryptoverse.
And how does the stock market is affected by the Fed as well? How about the housing market? Does that affect the overall crypto market?
Yeah, for sure. I mean, housing is interesting because the housing market moves at a snail's pace, especially compared to crypto. I mean, with crypto, it's like if you put out a prediction and it doesn't pan out the next day, people say you're wrong. With the housing market, it can take years to play out. You can look at things like, sale. This is like the sale price, the median sale price of houses sold for the United States. And I mean, this one at least shows it's coming back down, which is again, arguably what the Fed would like to see. The months to sell a new home was actually going back down, which is not a good thing, especially if the Fed's wanting to sort of loosen up supply. But the thing we have to remember about the housing market is that these cycles take place over many, many years, right? It's not like the cryptoverse where you go up 2,000% in a year, and then you go down 80% the next year. It's sort of like a long, grueling process. So I'm sort of looking for, like, here's a good example, right? Like months to sell a new home. I think that it probably bottomed out here at 1.5 months. In October of 2022, I'm thinking it probably puts in a higher low here as we get into the end of the year, and then continues to slowly move back up. So in terms of the housing market, we saw it slow down a lot, right? And of course that was due to higher interest rates. That was one of the things, higher interest rates. People don't want to go take out a mortgage 7 or 8% if they're just simply not used to that being the norm. But as the Fed continues to push higher for longer, at some point, I imagine something's going to break. And the people that have been unwilling to sell their home because they locked in a low price, that could change, here in the next year or two, especially if we ultimately get a recession, right? If you think about what makes people want to sell their home, it would be if they're moving for a new job. It could be if they're just laid off. Of course, there's also, just big life events like you get married or something like that. But remember, the Fed will continue this process until they see a material impact. And I don't really think they've seen that just yet, which is why they're likely going to keep interest rates higher for a longer period of time.
What are your next price targets for Bitcoin?
Yeah, I mean, so for Bitcoin, I think there's a good chance that sort of in terms of the next, like, let's call it 4 to 6 weeks, I think we're likely going to see price pull back to at least that $23,000 mark. A couple of reasons for that. Just from a monthly candle perspective, I mean, 23K is sort of where all this prior support and resistance was. So I think there's a good chance we'll see Bitcoin pull back into 23K there. Another reason to sort of consider 23K, if you were to overlay the year-to-date ROI in 2023 compared to the average of 2015 and 2019, kind of seems like we're just going to continue this slow fade, like as you can see the prior average did. And this would put us down at around $23,000. So I think that in the short term, we're likely going to see Bitcoin fade down to 23K. I'm guessing it happens sometime this month, is my guess. Is that because, again, normally September is not really a great month for Bitcoin. The average return in September for all prior pre-halving years is like negative 20%. So I don't really think September is the best month for Bitcoin. I do think the yearly high is in. So I do think that the yearly high is in for Bitcoin. Again, in 2019, we saw sort of this yearly high come in about halfway through the year. So I think we're likely just looking at more or less the same thing.
So next realistic price target for Bitcoin, potentially in the next month, is $23,000. What's your worst case scenario? Or when the Fed has to pivot, when maybe those other markets crash, what do you see?
Yeah, so here's a cool chart. This chart, I think we talked about the social risk before. There's also the price risk and the on-chain risk. And if you combine all three of them into a summary risk, you get a chart that looks like this. And the thing that I note here is that every prior pre-halving year, so in 2019, in 2015, and in 2011, we saw this total indicator risk go to that 0 to 0.1 risk band, right? And it looks like we're in the process of heading there now, okay? So I think that we do likely see Bitcoin fade back down. Whether it ends up being a higher low, a double bottom, or a lower low, obviously is going to be up for interpretation. If you were to ask me what is like my worst case scenario for Bitcoin, it is possible for us to put in a new low. I know that is not what we've historically seen. Last cycle, it was a higher low. Cycle before that, it was a double bottom, right? So there's not really a lot of history to show that Bitcoin puts in a lower low. So I don't really want to say that it has to happen. But worst case scenario, right, of course, is a lower low. And there is at least some evidence to suggest that that's a possibility. One of the charts that you might look at as reason to suggest that is if you were to look at like the balance price of Bitcoin. Historically, Bitcoin finds daily closes below the balance price every cycle, right? So you can see we found daily closes below the balance price in the pre-halving year of 2011. You can see that we found daily closes below the balance price in the pre-halving year of 2015. And you can see that we found daily closes below the balance price in December of 2018, just before the pre-halving year. And we came close to it again in early 2020. So far, while we have come close to going below the balance price, we actually did go below it on a wick. We have not seen any daily closes below the balance price. And the balance price currently sits at 14.7K. So in order to sort of check that off the list of things that need to happen, that would sort of be a worst case scenario, is a close just below, the prior lows. Again, this is what I would consider to be a worst case scenario. What's interesting about that though is the 2019 high was just below 14K. So I sort of think that might be a worst case scenario target, is somewhere in this range, right? Somewhere over here in this range as a absolute worst case scenario. And the way that it could happen is if the Fed just stays higher for longer, right? Like if inflation doesn't come down as quickly as they want, which it probably won't. We're watching oil rally today and continuing to move higher. If inflation does not come down as quick as they want it to, they're going to be forced to go higher for longer in terms of interest rates and to continue on with their QT. So as long as that's the case, then this does become, a potential viable outcome. But I don't think anyone should go into this saying like this has to happen. It's more so just a worst case scenario.
In the year 2023, have you bought any dips, Benjamin, or are you still all in cash in 2023?
The only thing I bought is at least in terms of crypto is Bitcoin. I mean, I bought some at the end of 2022, some I think at the very beginning of 2023. But it wasn't like a huge position, right? I've nibbled at it here and there, especially as we were in some of the lower risk bands. If you were to, just sort of go back to that chart, right? If you were to look at the total indicator risk for Bitcoin, there's actually a cooler way to look at it here. And that's to color code it, right? So if you color code this chart and you isolate just the lowest wristbands, right? So this is the 0 to 0.2 wristbands. This shows you if you had followed the strategy over the long haul, it would have worked out quite well, right? I mean, you still could have seen 50% drops here and there. It would have worked out quite well. But what's also interesting, you can highlight the peaks with the 0.8 to 1 wristband. If you take away the 0.1 to 0.2 wristband, you can see that we actually haven't hit it yet this cycle, right? But we've hit it all prior pre-halving years, right? 2011, 2015, and 2019, we've hit it. So the only thing I've really bought really since the end of 2021 is Bitcoin. And I just DCA it periodically when the risk levels are low. I haven't bought any altcoins. I think your viewers are probably well aware of that. I haven't bought any altcoins. I generally think they're just going to continue to bleed against Bitcoin. And so I'm looking towards, on the potentially the closer to a Fed pivot to get into the altcoin market.
By the way, for the audience, if anybody wants access to these charts, I will put an affiliate link down below. And Benjamin, to flip on the other side of this narrative, once Bitcoin does bottom, how long do you see until Bitcoin can reach a new all-time high?
That's a good question. I mean, history would say there's a good chance it'll happen either late halving year or sometime in the post-halving year. Last cycle, it actually occurred in the halving year, right? We saw Bitcoin sort of go parabolic and take out 20K at the end of 2020. It also came on the back of a ton of money printing. The cycle before that, it actually took until the post-halving year to put in new highs, right? Like if you were to look at 2013's peak, we didn't actually take that out until about halfway through 2017. So, I think if Bitcoin's going to take out these highs, which I think it will eventually do, I think the earliest it happens is my guess, 2025. I mean, it could happen at the end of 2024 if they just aggressively print again. So I don't want to rule that scenario out, especially since it happened last cycle. But considering that inflation is more of an issue this cycle than it was last cycle, I doubt they're going to do that. So my guess is the earliest that it happens would be sometime in 2025.
And are there any charts that you have that fundamentally can give us a clue to like, oh, maybe it'll top at this range based on this or this?
Yeah, I mean, there's other risk metrics as well. So I would say currently, if I were to go to the sort of just the Bitcoin risk, that's just based on the price, I would be looking for that one to go in the highest, sort of in that highest risk band. And I think right now it's not over six figures, but it certainly could get there, assuming we get some type of a bull run. I think it's important to recognize that there is this aspect, and there has been this aspect of diminishing returns, right? So like, 3 cycles ago, we saw Bitcoin go up, thousands, like hundreds of X, right? Like 600, 700X. The cycle after that, it went up 500X. The cycle after that, it went up 100X from the bottom. Last cycle, it went up, like 20 some odd X from the bottom. So it probably depends on where the bottom is. I mean, if the bottom's already in, then yeah, I mean, maybe we go slightly above the prior highs. Maybe 100K is in the cards. If the bottom's not already in, then it could be somewhat temperate. I don't think that we're going to 300K, right? Like, I know those predictions have already started to come back out again, just like they did last cycle. I do think Bitcoin will eventually go that high, but I don't think it's going to go to 300K this coming cycle, because if it were to go to 300K, then you're essentially, people are starting to sort of not look at this diminishing returns aspect of it again. I mean, again, like from the prior high last cycle, we only went up, what, 3x from the prior high, from like 20K to 60K? 60K to 300K would be a 5x move from peak to peak. So I think that's a bit of a stretch. So it's probably not going to be that close to those levels. But I think it's realistic to look at some of those slightly higher levels than the prior highs. Maybe we hit six figures next cycle. We'll take it one step at a time. There's also, I think there's one other chart that might be a worthwhile, just while I'm thinking about it, looking at the terminal price. So we looked at the balance price earlier for cycle lows, right? So this was the one we looked at for cycle lows. There's also one called the terminal price, which is sort of used to look at peaks. So that one's currently at 117K. And you can kind of see that it historically has come back up to the terminal price before ultimately fading back down. So again, you might see it break those six-figure levels, but I don't think it's going to go up to 300K like many might hope.
Ben, in a few months, I want to have you back on. We're going to revisit some of these charts, maybe closer to that Fed pivot. But either way, thank you so much. Links for your stuff are down below. Final thoughts for the Altcoin Daily Army.
Yeah, maybe final thoughts are just time-based capitulation is a thing, and I think the hard part is just staying at it. I watched Altcoin Daily brothers stay at it all throughout 2018 and 2019 and 2020, when it wasn't the cool thing to do. But eventually, all the hard work paid off. So again, if you are in that point of time-based capitulation, just know that we've been here before, and yeah, things could get worse before they get better. But history shows that the Fed will eventually pivot. And when they pivot, it's the riskiest assets like cryptocurrencies that tend to do the best.